Welcome back. It's set to be a big few weeks for Canada's economy. New job numbers this week put the unemployment rate at 6.8% for November, at its worst spot since 2017 outside of the pandemic. The data is bolstering expectations the Bank of Canada could deliver a bigger rate cut that might have been expected than they would have done a few weeks ago. The Bank of Canada is set to deliver its final interest rate decision of the year Wednesday. After holding the key lending rate steady at 5% for nearly a year, the bank has made 4 consecutive cuts since June. The key lending rate now sits at 3.75%. So what should we expect from the central bank, and how might it inform the fall economic statement? The Scrum is here to answer that. Nojoud Al Mallees is a reporter with the Canadian Press. Joel-Denis Bellavance, is the Ottawa bureau chief for La Presse. And Paul Bagnell is with BNN Bloomberg. Hi, everybody. Good to see you. Paul, welcome. Great to have you on the show for the first time. I'm going to start with you. What are your expectations for Wednesday, and do those job numbers lend itself to the idea it could be 50 basis points?
Absolutely, they do. Today's been a pretty dramatic day, Vashi, for people who watch the Bank of Canada. There is now an overwhelming sense of confidence among economists and investors, fixed income investors who watch this very, very closely, that the Bank of Canada will announce a 50 basis point rate cut next week on December the 11th. 50 basis points, of course, is half a percentage point. It would take the benchmark rate, called the overnight rate, from 3.75% to 3.25%. Those numbers that you mentioned, with that rate of unemployment moving up to 6.8%, were not expected. That was a much higher rate of unemployment than was expected. Somewhat counterintuitive as well, because the country did add over 50,000 jobs. 50,500 jobs were added to the Canadian economy in November, but the rate of unemployment rose, and that's because the labor force is growing. Immigration is boosting the population. Also, some people are coming back into the labor force after perhaps being laid off. They want to work, and if you're looking for work, you are part of the labor force. So new jobs are not being created fast enough to account for the increase in the labor force. Boiling it right down, the economy in Canada is slowing faster than the Bank of Canada would like it, and there's, as I said, a strong degree of confidence now that a 50 basis point rate cut is coming on Wednesday.
What do you think, Nojoud, as someone who covers the economy for CP, that means for a fall economic statement, for what the federal government wants to put in front of Canadians ahead of the Christmas break?
Well, I think a 50 basis point rate cut will help the federal government be able to at least try to dismiss concerns about their spending. There's an expectation right now that the government's going to blow through their target for the deficit of $40 billion. And, you know, if the bank came out with a quarter cut or was a bit cautious, then, you know, criticism would mount on the government, being like, hey, you're only making it harder for the bank now. Look, they only cut by a quarter. But with a half percentage cut, they're going to be like, well, you know what, the bank is cutting interest rates, they're cutting it faster than they expected, we held off when it mattered, and now, you know, we're giving you a GST break and don't pay attention to the deficit. So I think it'll be able to, it'll help the government be able to be like, don't look over there, look over here a little bit.
JD, with this fall economic statement, like, lots of turmoil this week about when it happens, if it happens. In your view, from a political perspective, what would the government be aiming to use this document for?
Well, basically to announce new measures if they could, you know, to try to stimulate the economy. Because if the Bank of Canada does go ahead with the 0.5% cut, that means the economy is not doing well. In the past, when the Bank of Canada reduced interest rate, Chrystia Freeland, the finance minister, every member of the cabinet was celebrating it as a good news story. Now it's going to be the opposite, because that means the economy is not doing well. That means costs for unemployment insurance will go up. That means that less revenues for the federal government. The bottom line will be even written in more red ink than they expected. So they're caught in a very bad way. And in French, we have a saying that there is such a thing as, you know, a vidange day in politics, when you take the garbage out in politics, because it's bad news day. It looks like
happens on a Friday a lot around here.
4:30 on a Friday.
Yeah.
It looks like the economic update will be part of that garbage day, that the government will want to use it and try to, very quietly say, here's the numbers, and then leave for Christmas.
I want to pick up on that point, Paul, in particular around the way the economy is going, because the finance minister late this week was asked very distinctively, because I think of something the former Bank of Canada Governor Stephen Poloz had mused about earlier in the week, whether Canada was in a recession or would enter one shortly. What is your view on that? She said no.
There are governments and central banks always say no when they are asked about whether the economy is heading into a recession. There are lots of predictions out there from economists that Canada may be on its way to at least a mild recession. The economy is decelerating fairly rapidly now, and as we know, the strict definition of a recession is 2 consecutive quarters of negative economic growth. There's a couple of other things at play here, however. As interest rates come down, there were more predictions today that Canada's housing market will heat up again. That likely means further price escalation in big real estate markets, and significantly, the Canadian dollar is now trading at just over 70.5 cents US. That's its lowest level. You have to go back to the pandemic to find a Canadian dollar that low. And one real possibility that poses is the possibility of a phenomenon called importing inflation. Where do we buy most of our goods and services outside of Canada? From the United States. When we just like going to an outlet shopping mall, when the Canadian dollar is weak, those items at the shopping mall cost more. And so as all those products we bring into the country from the United States cost more, that raises the possibility of inflation ticking up. And that would be a real headache for the economy, a combination of slowing economic growth and stubborn inflation.
And Nojoud, that sort of leads us to the possibility of things getting even worse with tariffs and counter tariffs. Do you anticipate any of that, the prospect of what Trump will do, to factor into the fall economic statement?
Well, I think the government's going to have to answer to what they think a Trump presidency will do to Canada's finances, to Canada's economy. I mean, there's always forecasts in there, and it's kind of difficult to be able to avoid that question. Now, the weird thing with tariffs and this whole situation is that things can continue to go how we've been expecting them to, which is the economy picks up next year, interest rate cuts continue, housing activity rebounds, or you have tariffs, higher inflation in the U.S., pressure to not cut interest rates in Canada, and just a political crisis that will weigh significantly on the economy. And so it's going to be very interesting to see how that's factored into the fall economic statement, and also how the finance minister responds when she presents it. Well, okay, how is Trump factored into all of this?
JD, last word to you.
There's no obligation to actually table a fiscal update in the House of Commons. And some economists were suggesting to the finance minister just to wait until a budget. Do not introduce a fiscal update, because the numbers you will be introducing might be wrong quite quickly if Mr. Trump does execute its threat to impose tariffs. So the bottom line is that this is going to be a period of turmoil, economic turmoil, and it's going to complicate the task of the finance minister as she prepares her last budget before the next federal election. I'm
going to leave it there. JD Bellavance, Nojoud Al Mallees, and Paul Bagnell, thanks so much to our Sunday Scrum. When we come back, the 3 things I'm watching for this week. Back in a moment.